Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. Well, it is Sunday morning, and just like we do every Sunday morning, we are going to do a dividend portfolio update. We're going to look at any options we were in for the week, any dividends paid out for the week, what we've bought, anything we've sold. All of the updates for the week. We did add $1,653 in new capital to the portfolio. A lot of pullbacks this week, a lot of stocks on sale. So we're adding a little bit more than what we normally do, and we will probably do that for the foreseeable future while these pullbacks are happening. And if you are a dividend growth investor and you like portfolio updates like this, you are on a journey to financial freedom like us. Join us here on the Vested Interest community, building a community of like-minded dividend growth investors so we can share our experiences. I do portfolio updates like this every Sunday morning. I do a stock pick of the day series Monday through Thursday where I look at a stock that's pulled back on the day to see if there's any value there. I also do monthly videos on the dividends that are paid out, so I'll have one of those coming up for the dividends paid out in September. And if you haven't caught my stocks to buy, 5 stocks to buy for October video, go ahead and check that out. That just came up yesterday on Saturday. Hit that subscribe button down below. Like I said, join us on this journey to financial freedom. Hit the notification bell so you are notified whenever we post any new content. Well, let's jump in. We did add, again, $1,653 and some change in new capital to the portfolio. So let's start out, we always do, with options. Anything there? And we did not have any options. Again, I am working 12s. Hopefully, those of you out there who may be impacted by the UAW strikes, I am as well. But I'm on the opposite end of the spectrum. I'm not on strike. The workers in our shop, or not our shop, but the company I work for, are on strike. So we, those of us that aren't UAW employees, are kind of having to pick up the pieces, and we are on 12-hour shifts. So I set some stuff up on Sundays right now. I usually, whenever I'm not working 12s, I go through the week and I can adjust and try to get into options throughout the week. But right now I'm just setting up on Sunday. So the two that I set up on NextEra Energy and Medical Properties Trust did not get picked up by anyone. So no options for this week. But we did receive dividends for the week, September 29th. All of the dividends came in on the same day, $202.03 in dividends. And it's very nice. If I was to, the drip is turned on. If I was to turn off the drip and not have this automatically reinvested, that I could use that to pay down some debt. I could use that to buy groceries, take my wife out on a date, anything that I really wanted. But right now I do have the drip set. So whenever a company pays out in the portfolio, the funds go right back into that company and buy more shares of that stock. So we were paid out by Bank of America, ticker BAC. Out of the financial sector, we were paid out $92.93. And with the drip, we picked up 3.35372 more shares of Bank of America. Union Pacific paid out, ticker UMP, out of the industrial sector, paid out $44.82. Went back in and picked up 0.2186 shares of Union Pacific. Not quite a quarter of a share, but I am adding to this position, so I'm wanting to get this up to where it adds in about a half share, maybe a little bit more. Obviously, Union Pacific shares are pretty expensive at just over $200. I'm hoping they dip back under under 200 into the 190s, even the 180 range, so I can build out this position a little bit more. Kraft Heinz paid us out $64.28. Went right back in and picked up 1.90129 shares of ticker KHC out of the consumer staples sector. All total, this $202.03, and the additional shares that it picked up added $7.39 to the portfolio over the next year in passive income. Excuse me. Now we get to the first new capital we added. September 26th, we added $1,177.85. We added one more share of Union Pacific, ticker UMP, out of the industrial sector. We picked up that share for $205.80. I think it ended the week out at around $202. Again, I'm hoping for this to drop back into the 190s, even the 180s, so I can really pick up some shares, maybe 1 or 2 shares here over the next several weeks, at least the next month. This is on my 5 stocks to buy list here, Union Pacific. Realty Income, another one on my list. I picked up 2 more shares there. This is O, the monthly paying REIT out of the real estate sector. Excuse me. Frog in my throat. Bank of America, ticker BAC. Not only did they pay us out dividends, but we picked up more shares of this bank out of the financial company, 4 more shares at $27.38. Medical Properties Trust, that's right, I'm still adding to Medical Properties Trust. Continues to drop the price down. They've cut their dividend in half. I just feel like there's a lot of value here. I think a lot of the worries about this company are a little overblown at this point. And at $5.14, I mean, it's all baked into the cake at that price. And in my opinion, we added 14 more shares, ticker MPW. This is another REIT out of the real estate sector at $5.14 per share. We added to our AT&T position, another one that I feel is just too cheap to pass up right now. Very high dividend yield on this, over 7%. We picked up 18 more shares, ticker T, out of the communication sector at $14.94 per share. And I think I'm going to continue to add, at least nibble on this one anytime it dips under 15. We added one more share to our newest position, Haverty Furniture Companies, ticker HVT. This is out of the consumer discretionary sector. We picked up that one share at $28.70. Another one that I'd love to pull back into the 27 or under range, or even just 28 and under, and really build out this position. I am seriously considering throwing in 2 weeks worth of investing capital and running a cash secured put on this one here. Verizon, ticker VZ, out of the communications sector, 4 more shares there at $33.03, and 10 shares of HP Inc., ticker HPQ, out of the information technology sector. We added those 10 shares at $25.96. And let's talk about this one for a second. Now, this is one that Warren Buffett had picked up a while back, but it looks like he is starting to sell out of this position, so I might want to revisit it. Not saying I follow exactly what Warren Buffett does, but I do consider him one of the greatest investors of all time. So if he's seeing some issues here, maybe, and there's all kinds of reasons to sell, guys, he may be doing a cash loss harvesting, tax loss harvesting on this one. He could be rolling those funds into other positions that he sees better. So don't just blindly copy anybody's investing. Make sure you're doing it for your own reasons. But all total, this $1,177.85 in new capital. The shares it picked up here added an additional $68.68 in new capital in new passive income over the next calendar year. Well, we weren't done. We went right back in, and on September 28th there, the last day we could invest in the market, was it the last day? No, it was not. The Thursday, the day before the last day we can invest in the market, we added another $475.37, and with that new capital, we added one more share to AT&T, and actually, these are in reverse order of how I buy them, just how they go. So T would have been the last one that I bought because I had a little bit of extra change left in the account, so I just went ahead and picked up one more share. I don't like to leave a lot of extra cash in my investing account because I don't make interest on it. So I'm either going to invest everything I got or pull it back and pull it into my savings account. But anyways, one share of AT&T, ticker T, out of the communications sector at $14.94. Again, I like it anytime it dips under that $15. Next, Air Energy, 4 more shares there, ticker NEE. This is out of the utility sector, $58.65 per share on that one. This one has really fallen back. I think it's settled around the $59 per share range by the end of the week, but significantly below my cost basis. So I'll probably continue to add 3-4 shares here and there over the next month or so long as it remains on sale. Ticker SBSW, Siboney-Stillwater. This is out of the materials sector. 11 more shares there for $6.27. And 1 share of Johnson & Johnson, ticker J&J, out of the healthcare sector. I am so close to getting to 100 shares, so I am actually happy this pulled back. I think it even settled out the week at around 155, and I am going to continue to add to this one too. I will continue to add up to 100 shares, and then I may back off. This is it is the largest position in my portfolio, but it is getting to be a little bit larger than I'd like it. I don't like any one position to be over 10%. This one isn't quite 10% yet. I think it's like 8.8, but by the time I get it to 100 shares, it will be pretty close to that 10%. So I'll probably hold at 100 shares. And this $475.37 in new capital added an additional $17.20 in passive income. So all total invested $1,653.22. With the new capital invested, as well as the dividends paid out in the shares that those dividends picked up, we added $93.09, just under $100, $93.09 in additional passive income over the next year. So that's that dividend snowball in effect. Not only the new capital that I add in, but the capital added from the dividends paid out, and that fund's going right back in and picking up more shares as well. And that snowball is starting to get faster and faster. Like I said, we're getting real close to getting around $100 a week in additional passive income, and it won't be long before it'll be much more than that. Now here is a look at the sector weights. Currently, communications makes up 9.04% of the portfolio. Consumer discretionary, here's that Haverty's furniture position, as well as Williams and Sonoma. I'd love Williams and Sonoma to drop back. It just keeps going on a massive run right now. But I'm going to continue to build out that Haverty position right here in consumer discretionary, and when Williams and Sonoma pulls back, I will add to that one as well. I'm also looking at Best Buy. I might be pulling the trigger on adding that into the portfolio here as well. I need to get some more positions here and build this portion of the portfolio out. Consumer staples, looking at a couple in this one as well. General Mills is looking attractive. Cisco Corporation is looking attractive as well, and it makes up 5.58% of the portfolio. Energy is sitting at 6.92% of the portfolio. Financials makes up 10.13%. Healthcare is sitting at 18.31%. Industrial sitting at 8.36%. Technology makes up 8.48% of the portfolio. Materials in second place, 14.76% of the portfolio. Utilities makes up 5.37%, and REITs and real estate sitting in third, 12.63% of the portfolio. No ETFs. I consider this portfolio my own ETF. I do have a couple ETFs that my daughters are in. SCHD is one. VWO is an emerging market ETF that I just added to the portfolio this week. So I'm not against ETFs. Don't think that I'm not. And if you want a very passive way to just set it and forget it and be able to add money in every week, ETFs are not a bad way to go. I would recommend, the S&P 500. A good one would be like VOO, VOO. SCHD is a dividend growth one that I like. Somewhere at QQQ, some people like that one. So get in. S&P 500 is the one, or a total stock market ETF like DTI would be another one that would be a good one. So if you want to benefit from the stock market, you don't have the time to look at individual stocks, those would be the ones I want. VOO would probably be the best one. VTI would be, in my opinion, second best. SCHD right up there with those two as well. If you're into the dividend growth investing like I am, that's a good one for you. That's one that, like I said, is in my daughter's account, SCHD and VWO. VWO is an emerging markets one, and I'm looking at, for them, if you're younger, VUG would be another one. That is a growth, more on the growth side of things, technology and growth. So I'm not against ETFs. I just don't have any in this portfolio. Now here's what a lot of people like to see from week to week. I like to show this every week, full transparency, so you can see what a real portfolio looks like being built out, the ups and downs along the way. And hopefully this gives people not only some suggestions on what they might want to look at to add to their portfolios, but it might give some people the motivation to get invested yourself. I am not a financial advisor. I am not some financial guru. I did not go to college for this stuff. I did not grow up with parents who were investors or owned their own businesses or anything like that. So this is all stuff that I've learned on my own. I grew up in a double wide trailer in a pretty poor family. So if I can do it, you can do it too. Don't be afraid of the market. Don't let fear of the unknown keep you from investing. It is really the only way, in my opinion, to get to financial freedom and be able to live comfortably at some point and not have to work a 9-to-5 job Monday through Friday, or even on the weekends. Some people even working 2 and 3 jobs. So that's why I do this. Hopefully it is beneficial to you. Drop a comment down below. Let me know if you've started your own portfolio or if you are still sitting on the sidelines. Now let's run through this real quick. Here is the ticker. These are the companies within my portfolio, how many shares I own of each company, what the current price is as of the close of business on Friday, what the market value is, again, as of the close of business on Friday, my average per share price here, my average cost. So this is what I have into the portfolio or into the position. Total returns, whether I'm up or down, percent return up or down. Again, obviously, if it's in the red, it is down. If it's in the green, it is up. What sector it falls in, whether it's a quarterly, monthly, semi-annual payer, the current yield as of the close of business on Friday, my yield on cost, the portfolio weighting. So what we saw on the previous slide was the weighting by sector. This is by every individual company. Estimated annual income. Here's the estimated annual income for each position as well. What months they pay out. The dividend growth, where it sits currently. I change this as it changes. And where they sit at 15% of the 52-week low. So when I'm looking to add a new position, I like to add it at 15% of a 52-week low or below. Right up against a 52-week low would be preferable, or even setting a new 52-week low if I can. And then also, if it's already in my portfolio, I'm willing to invest in it up to 15% of its 52-week low. So let's look at what I mean here. We'll use Union Pacific. It's kind of a good one right now. So I have 37.696. I'd like to get this to at least like 50 shares. And then same thing, maybe back off a little bit. I don't like, like I said, Johnson & Johnson here makes up 8.8%, so almost 9%. I don't want to go over 10% for anyone. But UNP is sitting at 4.67. So I can build this up a little bit. I still got room to go. So at least 50 shares is what I'd like it to get to. It currently sits at $203.71. Now that is not under my cost basis of $196.34, but it is under 15% of its 52-week low. So I am willing to buy Union Pacific up to $211.24. And I've been adding to this position one share, couple shares a week here for the last several weeks. Every time it dips under $211. So I think I added some at 210. I added some last week, I believe, around 209. This week I added the one share at 205. And again, if it's at 203 next week, I'll probably add another share. I am hoping this drops back into the 190s, actually, even below my 196. And I will continue to add this until I get to at least 50 shares here on that one. So that is what I mean by 15% of 52 weeks low. That is its relevance, why I put that column in there. So currently I have 5,026.509 shares total. Market value is sitting at $164,339.77. I have $175,876.11 into the portfolio. I am down $11,536.34 if I was to sell out of all the positions right now. Now this doesn't mean anything. I haven't lost this money because I haven't sold any of these positions. You only make a gain or make a loss or book a loss whenever you sell the shares. I don't intend to sell the shares. I am about capturing the dividends paid out on a quarterly or monthly basis, and about the passive income more than I am about the appreciation. Now I want to see appreciation, like when I see a stock going up by 28.48%, I like to see that, but I'm more focused on the dividend yield. And I am down 6.56% if you want to see it in terms of a percentage. Current yield is sitting at 4.867%. My yield on cost sitting at 4.547. And this, again, is what it's all about, whether the market's up, whether the market's down, whether the market's floating sideways. This keeps going up every week, every month, every quarter, every year as I add new capital, as the dividends in the companies that I own pay out dividends and reinvest into those companies, and as the companies increase their dividends over time. And it currently sits at $7,997.63. We didn't quite get over that $8,000 threshold I thought we would get over in October, but we are oh so close. We will definitely be over that next week, and then we are on to $12,000. That is my next milestone. I'm looking for $1,000 a month in passive income, so well on our way. Very nice to see. $7,997.63 in dividends, annual dividends, passive income provided by the positions already in the portfolio. Now, dividend growth over the next year should be about 8.21%, and that's these companies here increasing their dividends over the next year. It should be by about 8.21%. We'll see if that holds true. I'm hoping it does. That's based on what they've done as an average over the last year, so we'll see if that continues. Well, that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us here on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences. I share stock portfolio updates like this every Sunday, so come on back. Again, hit that subscribe button down below. Help me get to 1,000 subscribers. Hit that notification bell so you're notified whenever we drop any new content. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. Let me know what you added to your portfolio in the last week. If you have a stock you'd like me to cover in the Stock Pick of the Day series that I do Monday through Thursday, go ahead and drop it down below, and I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, friends, security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great weekend. Have a great week coming up, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, select criteria, or seek advice counsel, a certified financial advisor.